Have you ever felt like you're just, swimming in all this information about digital ledgers? You hear terms like decentralization flying around, but maybe feel like you need a bit of a shortcut to really get the why and how.
Yeah, we've definitely all been there.
So today we're taking a deep dive into Hedera Hashgraph, HBAR. Our mission, pretty clear. Cut through the noise, pull out the key stuff from our sources, and help you get genuinely well-informed. We're looking at Hedera's unique tech, its whole idea of decentralization by design, and importantly, where it's actually being used in the real world. Okay, let's unpack this. We've got some fascinating material here diving into a platform that's, it's making some serious waves. It promises speed, security, and a different kind of decentralization than you might be used to.
It's true. And what's really interesting in the sources is that it's not just about the tech specs, There's a big focus on the purpose and even the definition of decentralization itself, which is, frankly, a super critical discussion in the DLT space right now, especially when you start talking about trust and regulation.
Absolutely. When we think about digital ledgers, often the first thing is traditional blockchains, right? And we know the usual headaches, sometimes slow speeds, costs that can spike, and of course the huge energy footprint.
Yeah, the energy thing is a big one.
It really makes you think, okay, what would a next generation DLT look like if you designed it specifically to avoid those problems?
And that's exactly where Hedera Hashgraph comes in. It's positioned as, not just another blockchain, but a fundamentally different kind of distributed ledger system.
Okay.
It moves away from that chain of blocks, that linear structure. Instead, Hedera uses what's called a directed acyclic graph, or DAG specifically, the Hashgraph structure.
A DAG, right. So less like a chain, more like a web.
Sort of, yeah. Think of it like a constantly growing interconnected web. Transactions link to multiple previous ones, allowing for really efficient parallel processing, not just one after the other. And this architecture relies on two pretty clever algorithms. First, there's gossip about gossip, which sounds kind of fun, but basically it means information spreads across the network incredibly fast, like super efficiently.
Okay, like wildfire.
Exactly. And then there's virtual voting. This lets the network agree on the transaction order without needing actual voting messages back and forth. That cuts down delays massively.
And the results of that design, the performance numbers, they're pretty striking.
They really are.
You're looking at over 10,000 transactions per second, TPS, and finality, knowing your transaction is confirmed in just 3 to 5 seconds. That's fast.
Incredibly fast.
And the cost, we're talking like 0.000001 per transaction, basically negligible. Which, suddenly makes micropayments a real thing. Plus, it's very energy efficient, way less than proof-of-work chains like Bitcoin. And the fees are fixed and predictable. No crazy swings.
Yeah, that predictability is key for businesses.
So just for context, Bitcoin does maybe, 6 to 8 TPS? Ethereum, maybe 12 to 15?
Around that, yeah. Sometimes a bit more with layer 2s, but the base layer, yes.
So Hedera's speed, that 10,000 plus TPS, it's just a massive difference. Really makes you rethink the possibilities.
It absolutely does. And that performance comes with top-tier security. It achieves something called asynchronous Byzantine fault tolerance, ABFT.
Right, ABFT. That sounds technical, but it's important, right?
It's hugely important. It's basically considered the highest standard of security for distributed systems. It means the network can guarantee consensus, guarantee the order of transactions is correct and final, even if up to a third of the nodes are malicious or offline. And even if network messages get delayed or arrive out of order, it's incredibly robust.
Okay, so it's secure even under tough conditions.
Exactly. So you compare the proof of work, like Bitcoin, is secure but slow and uses tons of energy. Proof of stake, like Ethereum now uses, is more efficient, but there are arguments it can lead to power concentrating with big holders. Hedera's ABFT aims for that really high mathematical level of security, but delivers it with way higher speed and lower cost. Even compared to other fast chains like Solana, which does maybe 3,000, 4,000 TPS.
Still impressive, but yeah, less than Hedera.
Right. Hedera's architecture seems to handle that trade-off between speed, security, and costs really effectively.
That kind of performance, though, it brings up that other big question in DLT. Decentralization. If you're that fast and efficient, how do you make sure it's still genuinely decentralized? Because decentralization gets thrown around a lot, doesn't it?
It really does. It can sometimes feel like just a buzzword.
So what makes Hedera's claim of decentralization by design more than just, marketing speak. How is it actually different?
That's a great question, and it's something the co-founders, Dr. Lehman Baird and Mance Harmon, tackle head-on in their paper, Decentralization by Design. They basically force the question, why do we need decentralization, and what does it really mean? Beyond just no single point of failure.
Okay.
The core idea, they argue, is preventing any single entity from controlling things. No one actor should be able to shut the network down, change things maliciously, or secretly profit from it.
Makes sense.
When you spread control across many independent entities, the system just becomes inherently more trustworthy. It's less likely to harm users. And this verifiable decentralization, it's also super relevant for regulators trying to figure out if something is a commodity, like Bitcoin with no central controller, or more like a security tied to a specific company.
I see that distinction. So it's about having that power distribution be transparent and verifiable, not just claim. But okay, some people might look at Hedera's governing council and say, wait, having a council, even a diverse one, isn't that still more centralized than, say, Bitcoin?
That's a totally fair point to raise, and it's where Hedera's specific design choices come in. Their definition of decentralization isn't about no structure, it's about distributing control among many actors who are unlikely to collude, and making that distribution transparent and verifiable.
Okay, so how does the council fit that?
Well, the Hedera Governing Council has currently over 30 organizations. And these aren't small players. You're talking Fortune 500s, major universities, big Web3 companies. They're spread out geographically across different industries.
Diverse group.
Very diverse. And crucially, each council member gets an equal vote. One member, one vote. That prevents any single company from having too much sway.
Equal voting, that's key.
Absolutely. And then there's the transparency, all the really important stuff, code updates, pricing changes, adding or removing council members, adding network nodes, even treasury fund movements. All these are on-chain actions. You can see the digital signatures. It's recorded forever on the ledger.
Wow, okay.
And unlike a lot of other projects, Hedera actually publishes minutes from their offline governance meetings. That level of openness is pretty unusual.
That is unusual, very transparent. But what about the network itself? The computers running the thing, is that decentralized too, or just the council?
Good question. The network nodes, the actual computers processing transactions, are also designed with decentralization in mind. They're run by the council members, and they're deliberately hosted across lots of different systems, different infrastructure providers.
So not all on AWS, for example.
Exactly. You avoid having one company, like a single cloud provider, being a potential choke point. They call them decentralized permissioned nodes. The permission part means the nodes aren't anonymous, who's running them, tied back to a council member. This prevents, one person secretly spinning up a bunch of nodes to try and control things.
Gotcha. Known operators, but distributed.
Precisely. And one more big step, in September 2024, they contributed the entire Hedera codebase, Project Hyro, to the Linux Foundation Decentralized Trust.
Oh, interesting. Open source under a neutral foundation.
Right. It boosts transparency, encourages collaboration, and any updates to that code still need an on-chain vote by the council to actually be deployed on the main network. So there's still that governance oversight.
So really the message seems to be, don't just trust us, verify it yourself. Look at the council structure, look at the on-chain votes, look at the open code. For anyone building on DLTs, it shifts the focus, doesn't it? It's not just the tech, but how it's governed, how it's run.
Exactly. It's about building trust, not just on promises, but on verifiable structures and processes. That's kind of essential if you want big enterprises to come on board.
Which brings us to the next point.
Right.
All this great tech and governance has to be used, right? And the sources show Hedera is getting some serious real-world traction.
Absolutely. It's not just theoretical. Hedera offers 3 main services that enable these use cases. First, the Hedera Token Service, or HTS.
HTS, right.
That's for creating and managing all sorts of tokens, fungible ones, NFTs, and it has built-in tools for things like compliance checks, account controls.
Useful for businesses.
Very. Then there's the Hedera Consensus Service, HCS. This is all about getting a super secure, tamper-proof, verifiable timestamp in order for any kind of data or event. Think of it like a trust layer for logs.
Okay, like a digital notary almost.
Kind of, yeah. And finally, the Hedera Smart Contract Service, HSCS. This lets developers run standard Solidity smart contracts, the kind used on Ethereum, but leveraging Hedera's speed and low cost. It's EVM compatible.
Got it. So HTS for tokens, HCS for trusted logs, HSCS for smart contracts. And where are these being used? The sources mention AI and verifiable compute. That sounds pretty cutting edge.
Yeah, that's a huge one. The partnership with NVIDIA announced in July 2025 is really significant. Hedera is the ledger layer for a project called Verifiable Compute.
Verifiable compute.
Right, led by EQT Lab, NVIDIA, Scan UK, and Accenture. They're combining Hedera's consensus service, that HCS, with NVIDIA's powerful Blackwell AI chips. The goal is to make the outputs of complex AI workflows provably verifiable.
Wow. So you can actually prove the AI did what it was supposed to do, and the result is trustworthy.
Exactly. Think about using AI in healthcare diagnostics or defense systems or public administration. Being able to verify the AI's reasoning and output is absolutely critical for trust and accountability. This partnership aims to provide that.
That really does sound like a game changer for AI adoption.
It potentially is. And there are other examples too, like Neuron using HCS in a UK government trial to securely track drones flying beyond visual line of sight, ensuring, where they are and that the data is accurate.
Drone tracking, okay.
And even looking ahead, a semiconductor firm called SealSQ is working with Hedera on quantum-resistant chips for transaction security, preparing for the next generation of computing threats.
Serious high-stakes stuff. What about asset tokenization? That's another big area everyone's talking about.
Hedera is definitely a major player there. You see it used for everything from NFTs, like LG Art Labs Marketplace runs on Hedera, to tokenizing real-world assets. Waltech, for instance, is reportedly tokenizing $3 billion worth of luxury items on Hedera.
$3 billion, wow.
Yeah, and the HTS service makes this easier for businesses because it has features like built-in KYC options, the ability to freeze accounts if needed, ways to manage token supply stuff that's really important for compliance when you're dealing with regulated assets or high-value bids.
Makes sense. And finance, payments, DeFi, always a hot topic for DLT.
For sure. Shinhan Bank, a major bank in South Korea, is using Hedera to make their cross-border payments faster and cheaper.
Cross-border, always a pain point.
Exactly. There was also Project Acacia, a collaboration with Australia's central bank, the Reserve Bank of Australia, exploring how Hedera could be used for tokenized assets and central bank digital currency settlement.
CBDC exploration, interesting.
Yeah, and the stablecoin market on Hedera is growing about $151 million market cap, mostly circles USDC. Plus, those super low fees we talked about make micropayments totally viable for things like paying small amounts for online content in games or for IoT device interactions.
With the micropayment angle again.
And even in Africa, Standard Bank Group partnered with Hedera to tackle challenges in cross-border trade finance.
Okay, so finance is definitely a key area. What about supply chains? Or just ensuring data is trustworthy?
Huge applications there, too. Avery Dennison, the big labels and materials company, uses Hedera for supply chain transparency. Helps track products, authenticate them, fight counterfeiting.
Anti-counterfeiting, okay.
In healthcare, Safe Health Systems uses HCS for creating immutable, verifiable logs of patient data crucial for privacy and integrity. And in the sustainability space, there's Hedera Guardian, a platform for building auditable carbon markets and tracking environmental credits using tamper-proof records.
Verifiable green claims, basically.
Essentially, yes. Making sure the data behind those claims is solid.
It really sounds like a who's who of major companies getting involved. Google, IBM, Dell, Boeing, Lloyds Bank.
Legal in general, too, yeah. Major enterprise adoption, even governments are looking at it. The state of Texas was exploring Hedera for digital identity solutions.
Digital ID, okay.
Yeah. And in gaming, Mocha Brands partnered with Hedera. They're using it to validate play-to-earn activities better, trying to combat cheating, which is a big problem in online games.
So across the board, really practical uses. And the HBAR token, the network's cryptocurrency, that's what powers all this activity. It's not just for speculation.
No, definitely not just speculation. HBAR has two core functions. First, it's the fuel. You pay transaction fees in HBAR for using any of the services, minting tokens on HTS, logging data on HCS, running smart contracts on HSCS.
Yeah, the gas fee, basically.
Exactly. Second, HBAR is used for securing the network through staking. People can stake their HBAR to help secure the network, although currently staking is primarily to nodes run by council members as the network moves towards permissionless nodes.
Okay.
And importantly, Hedera has a fixed total supply, 50 billion HBAR. That's it. There's also a controlled release schedule. The sources mentioned, less than 31% would be circulating by the end of 2025. This is meant to prevent manipulation and allow the value to be driven by actual network usage and demand.
Controlled supply, predictable release.
Right. And one feature people like about HBR staking is that currently there's no lockup period. You can stake, earn rewards, but your HBR stays liquid. You can access it whenever you need it.
That's attractive.
Ah.
So yeah, connecting the dots, it really seems like Hedera is less about hype and more about building these practical, enterprise-focused solutions, solving real problems where trust, speed, and secure data are essential.
That's definitely the picture the sources paint. It's about enterprise-grade utility, particularly in these high-value areas like AI, finance, supply chain.
Okay, so with all these features, the partnerships, the real-world use, how is the market reacting? How is HBR actually doing in the wider crypto world?
Well, the market reception has been pretty interesting, showing a bit of a split, actually. On the one hand, you see clear signs of institutional interest picking up.
Like what?
Like that big price surge over 50% in 1 week back in July 2025, right after the NVIDIA partnership was announced. That got a lot of attention. And more recently, September 2025, there were reports of crypto whales, wallets holding large amounts, accumulating over 50 million HBAR in just a week. That often signals confidence in a potential price increase.
A whale's moving in. Okay.
Plus, you have Grayscale, a major digital asset manager, including HBR and their smart contract platform fund. And there was that whole buzz around a potential BlackRock HBAR ETF filing back in July. Even though it turned out to be a misinterpretation or rumor, the fact that it was plausible enough to generate that much excitement shows Hedera is on the radar of these big institutions.
Right. The institutional validation seems strong. But you mentioned the split.
Yeah, the sources point out this stark dichotomy. While institutions seem increasingly interested in Hedera, likely due to its compliance focus, its governance, its scalability, the broader retail crypto market seems less engaged lately.
How so?
Well, one source mentioned things like a near-empty Bitcoin mempool in 2025, which suggests very low retail transaction activity on Bitcoin. It seems like that retail-driven momentum we saw in previous cycles has kind of stalled across the board this year.
Interesting. So HBI is attracting a different crowd. Less retail hype, more institutional utility focus.
That seems to be the implication. It suggests maybe a shift in the market where long-term success for DLTs might depend more on provable enterprise-grade value and regulatory alignment rather than just speculative retail interest. Hedera seems well-positioned for that kind of market.
It's fascinating dynamic. But, okay, no project is without challenges. What hurdles does Hedera face going forward?
Definitely faces challenges. Competition is fierce. You've got other fast blockchains like Solana, which, okay, maybe lower peak TPS than Hedera, but still very fast and with a really large active community.
Community is key.
Absolutely. Regulatory scrutiny is another one. Even with Hedera's transparent governance, some regulators might still question if a council model is sufficiently decentralized, according to whatever rules they come up with. That's still an evolving landscape.
Yeah, the regulatory goalposts keep moving.
Exactly. And related to the first point, building that massive, passionate community on the scale of something like Ethereum or Solana takes time and effort. Network effects are powerful.
So can Hedera bridge that gap? Convince regulators and build a bigger community while keeping that enterprise focus?
That's the big question, isn't it? Can they leverage their clear advantages in performance and governance to win over both the institutions and a broader base? The tech edge is there, but perception and adoption across different groups will be crucial.
It really does feel like their path forward is about capitalizing on that strong enterprise pull, navigating the tricky regulatory waters, and continuing to demonstrate that decentralization by design isn't just theory, but practice. It's a tough balancing act.
For sure. But they seem to have built a foundation specifically designed for it.
Okay, so wrapping up this deep dive, Hedera Hashgraph. It's clearly different. You've got the unique DAG tech, the Hashgraph, gossip about gossip, virtual voting delivering incredible speed, low costs, and that top-tier ABFT security. Then there's the whole decentralization by design philosophy, backed by that governing council structure, equal voting, serious transparency, and the open source commitment.
A very deliberate approach to governance.
And it's translating to real use cases. We saw major partnerships in AI with NVIDIA, finance with banks like Shinhan, supply chain with Avery Dennison, plus plus interest from governments and other big enterprises.
Yeah, the real-world adoption is definitely a key takeaway. It shows the tech isn't just sitting in a lab, it's solving actual business problems. It highlights that maybe the next wave of DLT is less about speculation and more about building these fundamentally trustworthy, high-performance systems for critical applications.
Right. Moving beyond just theory to practical, verifiable solutions that enterprises can actually rely on. So, a final thought for you, our listener. As digital trust becomes more and more vital, especially with AI booming, what does decentralized really mean to you? Is it just about having no single failure point? Or is it more about building a system, like Hedera aims to, that's verifiable, transparent, resilient, and actively designed to make it hard for bad actors to win?
Something to think about.
Definitely. Maybe dig into DAGs versus blockchains, look up ABFT, or check out some of those use cases we talked about, see how this tech is really shaping things. Catch you next time.